All right, what is going on out there, peeps? I haven't did a little video about gold in a little while, as well as cryptocurrencies, because I hope you guys have been paying attention in the past. When I'm telling you guys not to panic, this is going to be a medium to long-term investment hold. All right, so this is why a lot of times when I do videos, I say, don't just listen to me. I'm gonna let you listen to some experts and what they have to say. I've been telling people now for a while that these markets are being artificially pumped up. There's no doubt about it. It's being artificially pumped up. Okay, so the thing is, what that means is eventually it's going to have to crash. And those people who are holding on to precious metals will be able to benefit from that. Okay, so again, if you guys are thinking about buying precious metals, give our friends over there at Money Metals Exchange consideration. The link will be in the description. If you buy more than $100 worth of precious metals, just use promo code Pimpy and you'll be able to get a ½ ounce of free silver. Okay, you guys, we have Pimpy's Investment Chat. It's the same name as the YouTube channel. In here, we do talk about gold, silver, cryptocurrencies, as well as foreign currency investments. Don't talk about politics in here. Bring that over here. The hidden things in front of your eyes. In here, you can talk about politics. We talk about NESARA, GESARA, politics, Trump, you name it. Okay, you can talk about those things in this group. The links for all three will be in the description. Okay, so look over here. This is a guy from Kitco, and I'm just going to play a small part of this because it's important for you to listen to what he's talking about. He's talking about the market. All right, so I want you to hear what he said, and I'm going to comment on it. So let's listen for about the first 2 minutes.
This week, the S&P 500 has hit new all-time highs, but our next guest thinks that this has nothing to do with what's really going on in the economy. Gerald Celente, a fan favorite of Kitco, publisher of the Trends Journal. Gerald, welcome back to the show.
Oh, thanks for having me on.
Right, so you were talking to me offline about how this has nothing to do with what's really going on in the economy. Can you elaborate?
Sure. Main Street has nothing to do with Wall Street. They're
Exactly.
two separate entities. And as we know, the Federal Reserve, everybody that listens to Kitco knows that they've been dumping in trillions of dollars worth of digital cash backed by nothing and printed on nothing to keep the markets artificially afloat. And, of course, the government as well, dumping in all this money. So now, this is from Monday's Wall Street Journal, front page. Cyclical stocks are leading latest leg of market recovery. Here it is. Right? So now, as you mentioned, the S&P 500 hitting new highs, bounced back from the coronavirus lows, and the NASDAQ keeps making new highs. Then you open the paper up on page 3, big story. More people go hungry and seek food aid as recession takes toll.
Yeah.
Main Street and Wall Street, totally separated.
But Gerald, wouldn't you say that bad news is good news now? Because like you just said, more people are going hungry. The Fed needs to pump in more money, and more stimulus is going to drive up the stock markets. What would you think about that?
Exactly. And it's artificially floating it up. And that's why people are buying gold and silver. And
See what he's saying? So this is what these smart people do. They know that the market is being artificially pumped. And it's not just being pumped by a little, it's being pumped by a lot. And because of that, people are going over to gold and silver as an investment. Now, keep in mind, they're still saying there hasn't even been a rush yet. So that means if that's the case and there hasn't been a rush, and we've been seeing a lot of people moving over there to the point where it was kind of hard to pick up precious metals. So if that's the case and there hasn't been a rush yet, what the hell does that mean when a rush does come? You know what I mean? There's going to be this huge rush of people going over to buy precious metals. That puts us way ahead of the ball game. All right, we're way ahead of the curve. Anyways, I just wanted to hear what he has to say because he's telling you that the market is artificially pumped. Now I'm gonna go listen to this gentleman over here at Este Bullion. I love listening to his videos, but I want you to listen, and he's going to show you some things I'm going to comment on once he's done.
This past week, the CFTC was out patting itself on the back for wrist slapping the Bank of Nova Scotia with a $127.4 million fiat Fed note fine, $77.4 million of which goes to their agency. They cited that the soon-to-be closing precious metals trading desk subsidiary Scotia Mercado was involved in manipulative and deceptive conduct that spanned more than 8 years and involved thousands of occasions of attempted manipulation and spoofing in gold and silver futures contracts.
They're not the only one. Remember, JP Morgan, too, has been in trouble. The problem is these people always get busted. They pay these huge fines. But here's what should be done. They should lose their licenses. And not only should they just have these huge fines, because the fines, they make more in profit. So there's no, what do you want to say? There's no incentive for them to stop being criminals. The fines are so small compared to the profits that they make, they just don't care. But if you close down their business and you take away their ability to do business, well, then they would care. And I think that should be the law. Unfortunately, a lot of these banks, again, bankers are bed buddies with a lot of politicians. And again, so nothing really happens to them. They benefit from the huge profits that they make, robbing people. Politicians get kickbacks in their campaigns. And so it's a vicious cycle, but nothing gets done. In my opinion, they should lose their license.
So the CFTC and the Department of Justice Commodities Fraud Group is about a decade late, likely many billions in fines short, and the traders that mostly benefited from these illegal actions get to keep their ill-gotten gains without having to face individual criminal prosecutions nor prison time. And so the cynics are correct yet again. As we collectively witness another defacing of the credibility of our commodity price discovery markets, the supposed agencies and rules of law which they are supposed to police, and ultimately the currency that's issued around the land. All of it is debased by such things. The silver and gold spot price markets moved mainly sideways this week as consolidations continue. Positive for silver bulls to see the spot price consolidating above the key 26 level. As well, gold continues consolidating still above its old 2011 high,
So this is good. In other words, the values that we're seeing right now on the spot market are being supported. This is good. Now listen, because he makes a point about how the market goes up and down during these types of trends, and sometimes they'll take huge drops. And what that does, he said, it weans out the weak investors. In other words, speculators that don't know what's going on, they get scared and they sell at a loss. And he's saying, it's a bad move. He's going to show you that the trend that happened before, a couple of decades ago, what happened. So after this up, down thing, and again, it's still climbing, but you're going to see some up, down. Even with the up, down, then all of a sudden you're going to see a huge swing up. That's what you're going to see. So pay attention, because this is what I warn people about. Stop being emotionally invested in your money. Some of you put a lot of money. I have people that put over $1 million. I have people that put in several $100,000 into gold and silver. So when you see a swing up and down of like $1, $2 or so, that's huge to you. I get that. So, but what I'm saying to you is, so what? Don't panic. Okay? Don't panic. Pay attention.
It's over 1,900 per ounce. Perhaps the best analog to the wall of worry we are currently climbing in silver and gold charts is the last major bullion bull market of the 1970s. Here is how gold behaved after finally clearing its then key $195 an ounce U-cut formation. There were months of price consolidations, which eventually led to higher highs. Take note, on a percentage basis, some of the moves up and down were massive, and they
I just want to point something out on this chart. This is 1972. 72. Gold at $50 an ounce in 1972. See it right here? And then from 1972 to 1970, it looks like 1980. Look at it. Look at that huge, what is that? Look at that, up to, what is it, 550 it looks like? Look at that swing from 50 all the way up to 550. That's huge in a short period of time. So if we're smart enough to be in the market at the right time, which is this particular graph, this is the behavior that happened before. It's happening again, except for we're in it at this level. Not $50, but I'm saying we were smart enough to move into this investment, what would be considered this time on this chart. So we are on the train at the right time.
Shook out weak hands along the way. For instance, check out the price explosion above 250 per ounce, only to cascade back down below 200 an ounce, a 20% loss in gold in a short time frame.
So look at 200% loss. This is what I'm telling you. Gold hit a level and then dropped. So it went from 250 down to 200, and it did it in a quick time. And what it did is people panicked and they sold. That's what he's saying. It shook out weak investors. You cannot be a weak investor. I need you to listen to me and listen to me good. These things happen in the market. Do not fall for this trick, okay? Just as soon as it drops, who cares? Let it go. Because you could see as soon as it hit 250, it dropped down to 200 and then went right back up. Okay, and then continue to go up. Look at this. Look at this. So from the time that everybody panicked and it dropped down here, people were selling during this time because they were panicking. Don't panic. Because look at it, it went right back up and then it kept going up. So all the people that got shook here, in other words, they got scared. So they sold somewhere around the $200 mark, 225 mark. Well, then they missed out when it went up to 550. So in other words, it doubled in less than a year. And so all those people who sold, they missed out. So all those who panicked here had an opportunity to double when it went up to here in less than a year. See that? That's what I'm telling you. So don't panic. Hang tight. Listen to me. I don't care what the market does. Hang tight because it's going to go way up.
Followed by a 4x multiple in gold's price within a 14-month time frame that followed. Here is how silver behaved over that similar time frame.
See, silver, not like gold. I told you, look at this. It outperformed. So when it dropped for gold, silver continued to go up, and then it spastically went up. So that's what I'm telling you about silver. It always outperforms gold, but it does act like a erratic child who's been eating way too much sugar. It goes up and it goes down. So hang tight. We are in a great position. We really are. Okay? Because look at this time back then when silver was around $2 an ounce, and then it shot up here to $26 an ounce. You see what I'm saying? So we are in the right place at the right time. I just need to keep bringing this to your attention that when you see this type of thing happen, when you see a drop in value, not to panic. Right now, I think we're at, let's see here. So gold is at $1,947. How if that sucker dropped down to $1,600 tomorrow, you don't even blink an eye. You just, that's it, to buy on a dip. You just go, woo, this is a great opportunity to get even more. Do you see what I'm saying? So you don't panic. You just understand that that's what the market does. And what that does is it shakes weak investors. It scares them. They're like, oh my God, I'm losing so much money. And, you know, there's a bickering going on. Family's all upset. No, don't do it. Just ignore it. It will slingshot back up. Okay, that's what I want to bring to your attention. So as far as cryptos are concerned too, cryptos are another safe haven everybody is running to. There are all kinds of stories out there about cryptocurrencies right now, but I can just tell you this. This thing is way more spastic than silver is. The money swings on cryptocurrencies, its behavior is really, really super erratic. It goes up really quick and comes down really quick. So again, like you do with your investments, with your cryptocurrencies, you can't panic. A lot of you are moving into cryptocurrencies. It's okay to have diversification. I think it's a great idea. You know what I mean? So I had everything just in Ethereum, but now I've moved money into Bitcoin, XRP, as well as XLM and Chainlink. So I jumped on those just so I can have a variety of these investments. And you can see they've gone down, you know what I mean? But not like a lot. But even so, you can't get panicky over them. These will continue to rise up as people get hip to what's going on and how the market is being artificially pumped. People are going to be moving to gold and silver more. Right now, again, we're at the right place at the right time. We were way ahead of the curve. So when you put your money in there, just leave it. Make sure you set a goal, how much you want of each one of them, and then don't touch them. Leave it alone. Okay? When you leave it alone, just let it do what it needs to do. It will go up. Okay? As people start to leave the market and they panic, they look for safe havens, people will move to cryptocurrencies as well. For those of you looking to get into cryptocurrencies for your first time, I do have a link that's in the description. You can follow it, and it'll take you to a location where you could buy cryptocurrencies, all right? It's free to join as well. So, and after you've been there for a little bit and you got about $100 invested into it, you have this somewhere on Bitcoin. You have what's called where you can earn free Bitcoin. I mean, free cryptocurrency. So I advise you to take advantage of it. All you have to do is watch a couple of videos, and they'll give you free cryptos. Okay. So nonetheless, I just wanted to show you this, and just also show you to so listen what the experts are saying to you. They even showed you the graph that you will see where the value of gold and silver goes up, and then sometimes you will have a pretty good damn sized drop. Not to panic. Hold on to your precious metals. Okay, you've seen what happened, how much it went up in a 9-year period of time. 9 years, it went from $50 an ounce up to $550 an ounce in a short period of time. All right, and you can see the climb was a decent, healthy climb. We are in that situation now, but in my opinion, it's not going to be a slow climb. Once people start getting panicking over what's about to happen, and I mean we're going to crash hard, then you're going to see a huge jump in the value of silver and gold. Okay, you guys, again, if you want to buy cryptocurrencies, I do have a link in the description. Follow it. It says where to go to buy cryptocurrencies. Also, when it comes to gold and silver, in there I have a link to Money Metals Exchange. You could go there too, and don't forget that if you buy over $100 of precious metals, then you can get a free ½ ounce of silver just by using promo code Pimpy, P-I-M-P-Y. All right, you guys, I just want to answer your questions. I know there is some of you have been watching the markets, and I keep telling you, so you're smart enough not to panic. That's good. I don't want to see people panic. Things are looking good. Okay, it will recover, and it's going to recover big. Okay, so hang tight and enjoy the ride. If you guys like the video, hit the thumbs up button. If you're not a subscriber already, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later.